Good evening, this is Rodney with the Triton Wave Market Outlook for Friday, February 15th, 2013. All right, let's look at the S&P 500. It seems to be riding since the last update on Sunday, which was back in here at about 1508. It's been as high as 1522 the last 4 trading days. One of the things I've noticed is as the market is going up like this, the Triton wave number 1 is going down. Now it doesn't mean that this is over, it just means that it's slowing down. The volume is slowing down and we seem to have a top in place. Well, I think it's in place. It keeps dragging along this. It keeps dragging along this line here of the 8-period moving average. Very slow, very methodical, as this moves down slowly. So what does this mean? We have a gap to fill right here, and the line at top that goes across from last September. It seems to me that at any point, any kind of, if you heard the Monday video, at any point we could just see a down day down to the 55-period exponential moving average, which is this number right here, 1468, and that could actually happen in a heartbeat. The more we get away from this area right here, the higher we get over the 377 exponential moving average, just like this, there's a tendency to come back down and revisit that line. It happens back here. It happens back here also, and back here. So the 377 is like it turns out to be a magnet. And since it's going down below zero for the first time since November 23rd, we could see this happen very, very quickly. So that would be, I mean, it wouldn't be catastrophic. It'd be about a, let me see, 1434. Okay, so we're talking about like an 800-point drop. And that could happen over like a few weeks period, or it could happen very quickly. As far as day trading the waves go, it went down right in here the day yesterday, and it went back up here today. Whoops, right at about 1513. And it went back down again on wave 1 here and on wave 2 here, and it's completely below zero here. So let's back this up a little bit and just see what happens when wave 2 goes completely below zero. You can see back in here yesterday it plummeted from 515 down to 509. Back here it went from the high of 1521 back to 377 exponential moving average. So there is potential for this to move down. Whether it does that or just keeps riding this crest, this unbelievable crest here of the 8-period moving exponential moving average, is only time will tell. I think it's time for a rest for this market, and to me it's just potentially going to happen very soon. Okay, one of the indicators I look at, and this is from a website called Trading View, and you can sign up for nothing. It's really pretty awesome website. It's free. You notice the SPX. All of these are real time, and once you get down to, if you want to follow, oops, this isn't moving here. If you want to follow the dollar, silver, the yen, the Dow, and gold, they are only daily. You can only get them in daily units, and they're 10 minutes delayed. But let's look at this right here. Let's focus on the euro, and the euro has definitely taken out its highs, and it's zigzagging its way down. And you can see on 15-minute charts, it looks pretty wretched from here down. Let me highlight that a little bit. This area in the past day. All right, if we look at the yen on a daily, that's topping out right in here. So all this means is that if the Aussie yen cross goes down, the stock market's going down. If the euro goes down, the stock market's going down. So you just have to pick your spots of where you want to get in and how you want to protect yourself. But this market has such a tremendous ride on the way up that I wouldn't want to be buying in here at all. This is like a wait and see. If it comes down and hits 15, it goes from 15.15, which it is now, it's down 300, and this is close to midnight Central Time on Thursday night. If it comes down to 1497, 1500, that's your cue that all hell is about to break loose. Just give it a chance to bounce back up again, because everybody's going to be buying the dips, and then it'll take it down. So let's look at a stock here that I love to follow, which goes by the name of Apple. Apple on this side, Apple on this side. Okay. So once Apple broke, all these lines on the left here are exponential moving averages in fib sequences. So this is the 233, the 377, and this is the 610 exponential moving average. When it broke down below this, let's get a 21 up here. Actually, let me see what the 1597 looks like on Apple. Come on. All right, Apple, once it broke down to 435, there was a buy signal on the 21-minute chart that went above zero. So T1, this is T1, T2, T3, T4, T5, all standing for Triton waves. T1 went above zero here. It followed with T2, and then T3, and then T4. So as long as they're continuing up in sequence, you can stay with the trade, even if there's a little bite in here. And this, as it turns out, was a 50% retracement of this bottom here. Well, it's like a 618 retracement. So what the thing about Apple is, it started above, it caught up to the averages and went back to the 377 exponential moving average. It went above it, and then all of a sudden T1 started coming down, and it rolled into T2 and T3, and this is a fantastic trading wave right here. This wave, T3. right here. You can use T1 as a trading wave. You use T3 and T4 as a backup. And you notice that this area right here, the longest wave in my arsenal, T5, on the dark blue one, is below zero again. So as long as this is below, right here, below the 377, then Apple does not look good for a long trade. When it was bouncing back, I suggested that this area in here was going to be the bounce point, and it almost hit it. I think I was off by like 1 point, but I had it at I suggested in 3 or 4 nights ago, or about a week ago, that if it hits 44, 45, and it just about hit that, to fill this gap and right into the 21 period moving average on the daily, then it was time for it to go down. So far it has been moving down, and the 21 is not the 8 is not crossing above the 21. So expect that to continue its downward move, and as long as the 21 keeps moving down, then these longer waves, which are all below zero on Apple, will confirm the downward move. That's all I have. Good trading, and the next update will be Monday night. Monday is a holiday. It's President's Day, Washington's birthday, Washington, Lincoln, they're all grouped together. Have a great long holiday, get some rest, and we'll see you at the next update. For those of you who haven't seen this before, I have a Triton Wave consulting service, and it is a concierge service that is tailored to your needs. I do private consulting, and I will look at stocks for you, and analyze them. Whether you want them back that day or the next day is up to you. It's a little bit of price change. I want you to know that I'm also now doing private consulting for clients who are interested in gold and silver, and I can text you moves during the daytime, and you just have to get in touch with me at, let me scroll down a little bit, just get in touch with me at tritonwaveguy@gmail.com. And a final note here, that I was recently recognized by the National Association of Day Traders, who called the Triton Waves a major new trading tool. It was very flattering. So again, if you want to get in touch with me, I am at tritonwaveguy.com. My name is Rodney Julian, and I look forward to speaking with you, helping you out. Have a great trading day.